in order for the money printer to get turned back on? Why is it that I think the bull run is not going to really begin and really get going until June 2026? And also, what is the thing that really causes crypto to go up? Got something new to share with you. A little thing that I like to call Cairo's Law. Shut the FUD up starts right now. Hello, everybody. I'm Cairo Copeland, and this is a very special episode of Shut the FUD Up. And today, what I got to share with you is a new recession indicator. Yes, when you see a lot of this here, it definitely means the United States is in some serious trouble and probably on its way to going into a recession. Man, I don't know how we can possibly dispute this. Anybody want to take a guess at it? I mentioned it last night. Last night on Tam Tam Spaces. Why am I choking? I don't know I'm choking. Okay, I'm good now. And I'll mention it again tonight here. And here's the thing, is don't think of it as so much of bad news. Because the deal is, if we go into a recession and it's bad enough, they're probably going to have to turn on that money printer to pull us out of it. So I don't want to view it as oh, it's bad, we're in a recession. I definitely want to view it as where it's good, we're in a recession. But what it can lead to, you can find the positive in it. So here's what we got to do. Here's what I want you to think of, all right? There's one type of person in this world that rarely has to deal with anything nasty. Rarely runs into any kind of problems. In fact, this is one type of person that always gets what they want and gets to do exactly what they want whenever they want to. This person lives an existence that you and I can only dream of. This person lives in such a different world that it's very hard for people like you and me to relate to them and for them to relate to people like you and me. Who am I talking about? I'm talking about hot girls with big boobs. All right? They do not live in the same world that you and I do, and I'll prove it to you here. I mean, you ever worked in retail or you ever worked in a restaurant? I mean, nobody gives a darn less than the people that work in retail. You go up to the poor retail worker who's stocking the shelves, and you ask him, hey, do you have this thing possibly in the back? It looks like you're all out. Do you have any in the back? And what he'll do, I know this because I once did this, or did it multiple times when I worked at Publix a long time ago. What I would do is I would go to the back, go behind the doors and everything, and I wouldn't actually look. I'd just play on my phone for a little bit and then come back out. And I'd be yeah, sorry, I looked, but we didn't really have anything. We didn't have what you wanted. We're totally out of it, sorry. Didn't even look or anything. I just made it all up. There's only one person who experiences that differently, and that's hot girls with big boobs. Because, fellas, you back me up on this one. Fellas that work a retail job, if a hot girl with big boobs came up to you at a grocery store that you work at and says, hey, are you all out of this stuff here? Can you check for me in the back? Then you're going to all of a sudden be very motivated. Oh, yeah, I will check it out here for you. So you just wait right here. Or no, don't wait right here. You just got to go continue your shopping, and I'll come find you. Yeah. And you will tear the back apart until you find that thing. Or you'll run to a competitor and buy it and bring it back. Or you'll run to another store location, buy it and bring it back. That's what you'll do. I got a friend who's a teacher at college. And he tells me he really hates his job, absolutely despises it. He's definitely not motivated to go to work ever, except in one condition. When there's hot girls in his class, well, then he is motivated to be the best teacher he possibly can be. He's really busting his butt the night before, going through his lecture and his notes and making them as pristine and flawless as possible because he wants to impress the hot girls in his class. And they think, oh, you're so smart. And the way that you explained that in class today, I would have never gotten it. So thank you so much for doing that. And give him a little flirty smile or something. That's what he lives for. That's what he lives for in his profession. Hot girls with big boobs rarely experience suffering. Yeah. And NJ Dub says exactly what I say. Publix, the deli makes the best subs ever. I would totally agree with that. Totally agree. What I love about Publix, especially today, Publix today does $5 sushi. That doesn't sound very appealing or anything. It was like, $5 sushi? I'm used to sushi costing like $5 a piece, not the $5 a roll. But at Publix, it's worth every single penny of it. It's a very good sushi. Very good sushi. Now, what I was getting at here with hot girls with big boobs is that they don't live in the same world that we do. There's always somebody willing to bend over backwards for them. Typically, we call those guys simps. I wrote a book on those people. It's called Don't Be Sympathetic. Matter of fact, let me pull that up right here. So, I know plenty of people I should be sending this book to because as I just peruse through X, I see plenty of people that definitely should have this book sent to them. Give me 2 seconds right here. I got it pulled up. Let me share my screen with y'all. This is what I'm talking about. This book here. Don't Be Sympathetic. The 12-step program to slaughter the simp within. That was a book I wrote a long time ago in my previous business before I was doing this here. And it was a real problem of guys that are just like, oh, she's just so beautiful. I can't live without her. I'll do anything she says. And we're willing to just be doormats and walked all over and everything. So, because, and it's very common. Like, these are not abnormal guys. Like, when you see a gorgeous hot babe with big boobs, well, it's kind of programmed within you to respond in like such a simpy, pitiful, pathetic way. So it became like such a problem. I needed to write a book about it. But what I'm trying to say here about this is like, the economy is in serious trouble when the simps are having to tighten their belts and they can't do the level of simping that they're accustomed to doing. And that, I think, is the case right now because I heard from a friend who is a real estate lawyer, a real estate rental lawyer. I heard from him that something is happening right now that should not be happening. Something that we rarely ever see because of simps. We rarely ever see this. And you know what it is? I'll tell you what it is here. It's hot girls with big boobs in eviction court. That's right. When you see that, you know that we're probably heading towards a recession because there's got to be millions upon millions of simps out there that would love to be the knight in shining armor, or I'd love to be, I'm going to be her hero, or would love to just bend over backwards and throw themselves on the puddle for this chick and bail her out. And then they hope that they get a little piece on the side from that. It's all a covert contract. Hoping that they get something out of it. But when those simps don't have money and the hot girl has to go to eviction court, the economy is in trouble. All right. Now, some other signs that are like that. Like I'm going to really research this one here because I think if we find this one, if this is really going on, then yeah, we're heading towards a recession. That is insurance claims on boats that were set on fire. All right, because you see, any insurance industry veteran will tell you this here, that boats are the ultimate discretionary purchase, and they're always insured because of how expensive they are. And during a downturn, well, the owner of the boat, they might be facing a job loss, or they're going to have to just do some belt tightening because of maybe a major medical bill or something like that. Sometimes what they'll do is they'll just commit arson on their boat for the insurance payout and use that insurance payout to cover essentials like mortgages or food. Boat fire insurance claims, when they typically spike up during recessions. And that is something that's quantifiable, unlike hot babes in eviction court. So that's what I'm going to look into here. And I'm going to watch that because, like, we watch a lot more of that. Oh, yeah, definitely, we are in a recession. You might have heard about the subprime auto lending company called Tricolor that recently went under. They filed for Chapter 7 bankruptcy. That's liquidation. That's not Chapter 11. And when you have a lot of, like, the risky lenders that are going under, well, we've seen that movie before. That was back in 2008. It's also starting to pop up that there could be a lot of evictions coming, or not evictions, a lot of foreclosures happening next year in real estate. And if that happens, that would probably inspire them to turn the money printer back on. I want to try to talk to Melody Wright. I don't know if you heard of Melody Wright, but she's like one of the best real estate people, one of the best real estate analysts out there right now, in my opinion. I want to try to get her on the program and talk to her about this, because she had said that it's likely there could be a lot of foreclosures happening in Q2 of next year. So I'd love to hear her out on that. Oh, and speaking of guests, we finally made it happen. Coming up next Monday, got a very special program for you guys. Next Monday, we're finally going to have the conversation with T-Bird. All right. So with T-Bird, he says that this bull market has to end this year. He is a 4-year fundamentalist. No disrespect to him, or no hate on him for that. He's a 4-year fundamentalist. And what I'm going to do is I'm going to present my case on why I think it's going to have to take longer. And then he's going to tell me why I'm wrong. All right? If anybody can make the case that this thing is a 4-year cycle and it has to stick to 4 years, and the only person I think I can make that case intelligently is T-Bird, because everybody else I talk to about this, and they tell me, oh, it's got to end because time's up, so it has to end. Or what I heard on X today was somebody just go, well, number went up high, and it's coming down a little bit more now, so it's all over. What I'm going to be looking for is, T-Bird, why don't you tell me why you think it's got to end in 4 years, and like what specific events are you pointing to that's going to cause it all to end? All right. NJW say, if my title is true, it's going to send Pulse Chain into maximum capitulation. Yeah, I think maybe we need that. Maybe we do need to get a lot of people out of it here, because what I hear is there's a lot of people on Pulse Chain that really should not be there because they're not believers. Now, I don't know that it's going to do that. I don't know that delaying the bull run is going to do maximum capitulation on Pulse Chain. Now, what I do think, though, is, yeah, the overall market is going to have some capitulation from it, or is going to have a lot of sell downs because of it, because a lot of people are expecting, well, this thing should have gotten going before 2025 was up. The year rolls over. We didn't get going. And so a lot of people are just going to start selling out. And they'll do it. They'll be free to do it in 2026 January because it's a new tax year. Maybe some people that are like still not in profit, and they would probably sell out in the end of December. So I gotta tell you, like, I've been saying this, I've been very consistent on this. September's going to suck. It's true. I said that ever since the beginning. September's going to suck. And since we got into September, I've held to that even after the rate cut. September is a difficult month because there's so much economic uncertainty. We got some reports coming out tomorrow and another one on Friday, an inflation print. We're going to have a very difficult Q4, I think, because there is going to be a lot of tax loss harvesting. And lots of people are not in profit. Like, the overwhelming majority of the market is not in profit. And that's most coins, not just our coins, but most coins are not in profit. There'll be a lot of tax loss harvesting, which, hey, If you can do it, go ahead and do it. I did a bunch of that last year, brought my taxes down tremendously. So definitely do it if you can. But that's going to cause a whole bunch of confusion and distortions in the market, because a lot of people are going to look at all that tax loss selling and be like, oh my God, it's all over. You're going to hear it's all over more times in the next 3 to 4 months than you probably ever heard in your entire life. You're going to hear it so damn much. You're going to be like, oh God, will everybody please just shut up with that already? You will hear so much of all these people saying, oh, the bull market is done. It's time for the bear market now. And then I think January probably be a very tough month too, because a lot of people are going to look at it and be like, well, we didn't get a bull run going in all of 2025, and we should have, because it's what the 4-year cycle says, and the time and the calendar tell crypto what to do. But when that doesn't happen, a lot of people are going to start selling it down. And that's going to mess up everyone's perception of where the market is really at. And a lot of people will think it's all over, but those folks are going to shoot themselves in the foot. And I'll show you today why I think that is. Why those people who do that, I think they're going to end up buying back in at higher prices later on. I really think that they are going to come to regret the fact that they sell in the next few months, just because of where and or just because of where we are with the money printer. And that's something I'm gonna really hammer out. I was almost fully prepared to release it today. I was telling Tam about it earlier today. Something I wanted to fully release. I call it Cairo's Law. I'm not quite ready for prime time to talk about what that is here, but if you read my book, Decrypting Crypto, well, then you kind of get the idea of what it is, and that's bull runs are caused by money printing. That's all it is. Technology doesn't matter. The halving doesn't matter. The calendar doesn't matter. ETFs don't matter. I mean, they help, but they don't matter. They don't cause it. The money printing is what causes it. It's the reason we have the cycles. That's what my book, Decrypting Crypto, talks about and explains. I'm trying to work it into something a little bit more fine-tuned to call it Cairo's Law, where I say for every new dollar of money printed and added to global M2, the crypto market capitalization goes up by X number of dollars or X number of cents, probably cents. That's what Cairo's Law is. And I want to present that to you. But before I really present it, I want to make sure that it is absolutely bulletproof. I want to make sure that it's right, because I don't want to present it to you and then later I got to come back to you and be like, oh, hey, I got to make an amendment to it all here because it looked right here, but then I did a little bit more research and now it looks like this. So Cairo's Law is basically stating that money printing is the number one driver of the crypto cycle, the number one driver of the bull runs, and the number one driver of why crypto goes up. If somebody else thinks they have a better explanation for what causes the bull runs, what causes the cycle, what causes crypto to go up, reach out to me on X. Let's bring you on and let's talk it out. We're going to do that with T-Bird next Monday. I don't know if T-Bird and I will be doing it live because there's a major time zone difference between the two of us, so it might be something where I have to record it and then upload it later. But Monday night, coming up Monday night is when we're scheduled to talk. Hopefully I can do it live. Hopefully we can do it live here, but we'll see. All the details have still got to get worked out. All right. Now, what I really want to talk to you about today is the money printing schedule, why I think that money printing is going to take a long time before they start doing it. For one, It's like a nuclear bomb when they do quantitative easing, and we still haven't fully recovered from the last time that we did it. Last time they did quantitative easing, prices went up, and they've stayed up. And I'm talking prices of everything that you buy, prices of groceries, gasoline, houses for sure, your insurance, healthcare, electricity bills. Electricity has gone up, energy's gone up. All these price increases, particularly of things that you have to borrow money to buy, like cars, houses, education, they've gone up and they're staying up. Those price increases are practically permanent. And that was because they did way too much QE last time. And QE, just when you hear that, just think money printing. Now, QE is good for people who own assets like stocks, like crypto, like real estate. The people who own those assets are going to do very well when QE goes off, but everybody else is going to do terrible. Their lives are going to suck. Their lives are probably going to be ruined. I mean, there's a scene in the movie The Big Short where I forget the guys' names. It was those two kids that ran like a hedge fund out of their garage. They went off to Vegas with the character that Brad Pitt plays, and they got a bunch of all these other ignorant jerk-faced bankers to take their bets, and they knew they were going to win on the investments that they were betting against. They knew they were going to win, and so they're dancing and celebrating and everything. And Brad Pitt's character, he doesn't like that. He's like, don't dance. Don't you know that for every little tick in unemployment, the death rate goes up? And he was making like this connection that they hadn't thought of yet, and says, this is why he hates banking, because it reduces people's numbers. And talks about like, what you guys just did is just bet against the American economy, and a lot of people are going to get hurt. When that money printer goes off, a lot of people are going to get hurt. It might improve your life. It might give you a life-changing wealth. But a lot of people are going to have their lives ruined because they're not going to be able to keep up with inflation. And this is where I keep talking about the I-shaped economy. Instead of the K-shaped economy, it's an I-shaped one where a tiny little dot of people own all the assets and everybody else is far separated from them. And they don't own anything. They're going to have to work for all the people who own all the assets. It's not a pretty picture for them. That's one reason why they're going to wait until the very last second to kick off the money printer. Another reason, though, is that they don't have the votes. What votes am I talking about? I'll show you here today. But first, let's do our usual little bits of housekeeping here. Let's see, we got our usual things to show you, such as, how's the market doing today? It made back some of what it lost today. It made back some of what it lost earlier this week. Ethereum is still sucking here. It's still down 10% on the week. But Bitcoin did tick a little bit further up here again. So it's only 9% away from its previous all-time high. Just needs to pick up $11,000, and it's right back there. XRP down below $3, but don't like that. That's struggling. Solana, that's hanging kind of strong there too. Hyperliquid, man, this thing was priced a little bit lower, but now it's kind of like back to the price where I bought it at. Kronos, paying a lot of attention to that just because I know that Trump is going to have to buy another $6 billion worth of it. Athena, not bad. The thing that's taken like a really big hit has been the Sonic ecosystem. Kind of pains me to look at it right here. Like, they got kicked right in the teeth because, these guys were holding pretty steady at 30 cents. Now they're down below a quarter here. Not looking great for Phantom right now, but it's not looking great for anybody right now. I'm not Phantom, Sonic. I still mix them up with Phantom. Not looking great for the Sonic ecosystem right now, but it's not looking great for anybody. GameFi took a big hit today here too, because like the Root Network, man, they lost 13% today practically. How about Illuvium? 14% on the week. All right, now let's take a look at our ecosystem here. or pulse chain does not look pretty here either. Does not look pretty. I mean, what does seem a little bit encouraging, though, is EHEX seems to be holding its ground where it's at there. EHEX has been holding its ground a lot better than I expected. And I think a lot of that is due to the fact that BankX is almost totally out. They only got about $40,000 worth left of EHEX. But also, EHEX is what Johnny Chaos says is it's very close to the door, meaning it's the easiest to buy when you are trying to get into the pulse chain ecosystem. Well, first you buy some stable coins over on Coinbase or whatever, then you send them to your MetaMask on the Ethereum network, and then you bridge from Ethereum to pulse chain. But while you're there in Ethereum, you could easily just buy EHEX, and it's turned out to be like one of the top traded coins, one of the top 5 traded coins in MetaMask is EHEX. So all these people saying EHEX is dead or that Hex in general is dead, I heard BitBoy say that. I don't know of that many dead coins that are in the top 5 of traded coins in MetaMask. And the staking on on both Ethereum Hex and Pulse Chain version of Hex have gone up. That doesn't look like dead to me. So, Ben Armstrong, got nothing but love and respect for you, but you could not have said it worse. Look at the TradFi markets here. How do we look? We didn't have a great day today, but the futures are up right here. That doesn't really mean anything, though. Futures are pretty useless. We've got to take a look at any special stories here. No stories really care about there. There's a story I care about, though. That's the dollar index, the DXY. It is not doing what it's supposed to be doing after a rate cut. After a rate cut, this thing should be going down, but it's going up. Look at this nasty big candle that we had today in the DXY, going from 97.22 all the way up to almost 98. We went up to 97.87. This is typically not something you see after a rate cut. You see it go down. And it did go down as they were starting to announce the rate cut, and Jerome was starting to speak. It was at 96.43. It went from there all the way up to 97.81, almost 98 here. And we got some thoughts on that. So I'll probably tell you a little bit about like why I think that is. But the main thing about this here, like why is the crypto market sucking, is because the DXY, the dollar, is getting too strong. The purchasing power on the dollar bill is going up. And that is the opposite of what you need to have happen, because your crypto assets are priced in dollars. If your dollars get stronger, they buy more crypto. That means the price of crypto went down. Don't know how many times I got to explain it before it gets through the thick skulls of all my haters. Next up, the 10-year Treasury. How is that doing? It's still stuck right there at 4.14%. We need that to we need it to go higher than the federal funds rate, or we need the federal funds rate to go lower than the 10-year Treasury. That's the deal here. Is like we have a we have a 10-year Treasury at 4.14, and then we have a federal funds rate that is between 4 and 4.25%. Or no, it's between, actually, yes, it is. Between 4 and 4.25. See, they don't just set the rate at like a fixed percentage. They give it a range is what they do. So until those two flip, the world doesn't make sense. You need the 10-year Treasury to be higher than the federal funds rate, and the vice versa. You need the Fed funds to be lower than the 10-year Treasury, because the federal funds rate is the rate on an overnight loan, and the Treasury is the rate on a 10-year loan. Why on God's green earth should it cost you more to borrow for just one day than it should cost you to borrow for 10 years? That makes zero sense. That's the world upside down. You need those to flip so the world's back to normal. And then, when the world's back to normal, the investing public will invest like normal. And I'll explain a little bit more about that today. We call that the yield curve. I mean, what we're looking at right here is practically a yield curve, where it's the idea that these short-term rates, like 3 months, 6 months, 9, 1 year, they should always be lower than the long-term rates. Now, over here on this chart, they kind of are, but you got to bear in mind here, it's still kind of out of whack, because like the 3-month Treasury pays a higher rate than the 6-month Treasury. It pays a higher rate than the 1-year Treasury and the 2-year and the 3-year. That makes no sense. This isn't much of a yield curve. It's more like a U, like a horseshoe, because it starts up here, and then it dips down, and then comes up. And that, well, actually, it's more like a J is what it's like. But that signals that there's something really wrong in the investment world. And this creates a ton of uncertainty and prevents people from investing in risk-on assets like crypto. I'll talk a lot more about this here today. Now, I got a free gift for everybody watching, and that's this book here. It's called Your Parents Were Wrong, Replacing Outdated Advice. You've been told some outdated advice? All of us have, I'm sure. Big one is go to college. Any degree is a good degree. Follow your dream and the money will follow. All that crap. And you need to be deprogrammed of all that advice, that bad advice, and told what the real deal is. That's really only purpose of going to school is not to follow your passion. It's not to do what you want or to find yourself, because the only person that gets to do what they want is hot girls with big boobs. They get to follow their dreams, but everybody else, we got to do something different here. All of us, we have to get in-demand skills that pay. That's the only purpose of school, is to get in-demand skills that pay, because the only purpose of work is not to follow your passion. It is not to enjoy your time at work like it's your purpose. No, the only purpose of work is for you to go make as much money as you possibly can in the shortest amount of time so that you can be free from ever having to work ever again as quickly as possible. And then you can spend the rest of your life doing whatever you want. Then you can go find your purpose. Then you can follow your passion. That's how I do it. You see, I was not passionate at all about TradFi when I worked in TradFi. I hated just about every single client I had. I hated every single appointment I ever had to sit through where I'm doing the financial planning for people. I hated just about every single second of it. It was absolute hell. But I did it to earn as much money as I could in the shortest amount of time possible so that I didn't have to clock in at work anymore. And now I can follow my passion. My passion, you want to know what it is? It's playing guitar. My passion is playing volleyball. My passion is going out dancing. Or I don't even have to go out dancing. Y'all seen this here? This is kind of dancing that I used to do and I still do to this day. If y'all didn't know, I used to be a stripper because I followed the stupid, outdated advice that my parents gave me, and I went to college for a useless degree because I was passionate about it. And when I graduated, I had to be a stripper, and life sucked. Now, I do enjoy the dancing. I do enjoy doing pole, and I still do it today because I still do pole fitness today because the best piece of home fitness equipment is a spinning pole. But life back then in 2012 really sucked because my parents gave me really bad advice that was completely outdated and absolute crap. Do you think maybe you got some outdated and crap advice from your parents? Well, this book here will show you how to deprogram yourself from that bad advice and give you the advice that they should have given you. And you can get this book 100% free. All you got to do is head on over to my Substack. Go to reinventideal.substack.com. That's reinventideal.substack.com. It is 100% free to sign up. It costs you nothing. Just come over here to where it says free gift. You click there. And when you sign up, when you subscribe to my Substack, you will get a copy of this book emailed to you 100% free. 100% free. If you want to be a paid member, fine. You get more books too, because I'll also give you this book if you become a paid member. And that is my gift to you as a way of saying, hey, thank you for watching my streams. Thank you for being a fan. Thank you for supporting me. Tobleroo's got a question here. Let's put it on the screen. If QE happens, how much do you expect compared to the amount they printed in 2020? If they do less, does that mean the crypto bull run will be less? Very good question. I think I did cover this at one point here. Like the amount of money that, or the amount of debt that's being rolled over is twice the amount from last time. So if they were trying to do what they did last time and have the same effect, they would need to print at least half of it. At least half of the debt. They need to print that money. So 30 trillion is likely to be rolled over, or 30 trillion is the amount of debt that's being rolled over throughout the whole world. And if they wanted to really get that under control, they could print 15 trillion. And that is about twice the amount that they did last time. About twice the amount, because let's have a look here at that federal balance sheet. I mean, that'll tell us practically exactly what they did here. So that money printing, it occurred right here. March the 2nd, we went from $4 trillion to $7 trillion. They did some more, took it all the way up to about $9 trillion. So actually, yeah, it'd be like 3 times the amount, because they basically printed about $5 trillion last time on the federal balance sheet. They did $5 trillion. Now, if they just did that again, going from 6.6 trill, adding 5 to it, for the first time, the federal balance sheet would be above 10 trillion. It'd be above it. And that would have a large effect on overall global M2. And like once the Federal Reserve's balance sheet does it, well, then central banks in other places around the world, such as People's Bank of China, the ECB, the BOJ, they would feel good about doing it too, about going up that high. So that would increase overall global M2. Because remember, the money printing is not just here in the United States. I mean, the money printing that we do here in the United States matters the most because we're the world reserve currency, but it's not the only money printing that goes on. We want to talk about global M2. That's the real big deal. So if they just did what they did last time, I think that would have a huge effect that would make this market, this bull market, a lot bigger and a lot more impressive than the last one that we had. I think they may have to do a lot more. But I don't think I can really make a prediction on how much they will do, though. I don't think I make that prediction because as we get closer to it, we'll have a lot more, we'll have a lot better way to measure it. But what the subject of this stream is that it's going to be a long time before they do it, I think. I think it's going to be a long time. And I'm talking the earliest in which they could do it is going to be June of 2026. And I know that that's not easy to hear. I know that that's not what you guys want to hear. I'm being as honest with you as I can, though, because I could get up here and just be like, oh, yes, they're going to print money, and Bitcoin is going to keep going up, and gold is going to keep going up, and Hex is going to keep going up. Every crypto asset you own is going to go up. I could go up here and say that. And if I do, maybe you'll feel good for like 5 minutes. But then as the days go by, as they turn into weeks, and weeks turn into months, and it hasn't happened yet, you're going to be pretty angry at me, and rightfully so. So I want to be as honest as I can be with you and give you the absolute worst case scenario. And really, the worst case scenario is that it takes even longer than that. I think the earliest that they could make it happen is June 2026. Let me get into why. Let's start with what is it that is Donald Trump's vision for America? What is it that is Scott Bessent's vision for America? Because Scott Bessent, if you don't know, he is the Treasury Secretary. And when you look at like what him and Trump are trying to do, they want to reindustrialize America. They want to bring as many jobs and factories and manufacturing back here in the United States, because what we can see is that America's in decline. We barely produce anything here. And during the pandemic, when everything stopped getting produced, when you had that giant supply chain disruption, that was a big problem that our economy probably hasn't even recovered from. But what they really want is they want to turn us from being this quasi-empire into a straight-up powerhouse nation state. You know, I think of like America the way that it was in World War II, which I know none of y'all are old enough to have lived back then, but I kind of think of like how you see it pictured in media. When during that time, during World War II, the Treasury had basically hijacked the Federal Reserve from about 1942 to 1951. And that had an amazing effect on what we called the yield curve, which is all of the yields that you see for the different time periods. Let me show you exactly what I mean here. We want to compare the yield curve from the 1940s and the 1950s to how it appears today. And I have a chart that does that. All right, I hope you can see this here. You see, you know how I was saying that the federal funds rate needs to be lower than the Treasury for the world to be normal. Well, also, you need your short-term T-bills to be lower than the 10-year Treasury. And you need both like the short-term T-bills and the 10-year Treasury to be lower than the 30-year bond. Because if it's not, it just doesn't make any sense. And also, you need this yield curve to have a very steep upward slope. Now, this purple line, this is how it looked back in the 1940s. This orange curve, or this orange line, this is how it looks right now. Now, it is somewhat correct in the sense that, like, you have the short-term bills, you have the short-term debts having lower yields than the long-term debts. But this isn't very steep. This is a pretty flat curve. We don't like how it's flat. We need it to be a lot more steep. It needs to really curve upward, like this purple line does. You see this purple line? That's what we would call a steep yield curve, because a steep yield curve can serve as a form of stimulus for the economy, kind of like stimmy checks, tax cuts, money printing. You got a steep yield curve? Well, then what you have there is you have a capital environment, a capital market that makes sense, and the average financially illiterate businessman in America can navigate it. That's why it's so important. All right. So let's talk about like why this is so. Why do they got to fix it, and how are they going to fix it? I mean, let's go back to World War II. You see there, the Fed had capped the Treasury bill yields, the short-term T-bills, at just 0.675%. And then the long-term bonds, which were like 10 to 25 years, they capped those at 2.5%. That sounds low compared to today, but back then it was a big deal. Those were some pretty high rates for them back then. Now, when you compare it to today, our short-term rates are a lot higher than that, a lot higher than 2.5. And our long-term rates are almost double 2.5. But what's the real big difference? Back then, the yield curve was more steep. It's more like a mountain versus like the flat hill that we've got right now. How steep? Well, got a graph for that here too. Let's see. This one here, it says like the steepness of the curve back in that decade was 1.83%. And then today, when we look at the steepness of the curve, and that just but steepness, all they just mean is the spread between the two different yields, between like the 10-year and the 1-year. It's just 0.17. That's the spread. You can also call it a term premium. If you ever hear the term, you ever hear the phrase term premium, what that just means is how much more does the 10-year treasury pay versus the 2-year or versus the 1-year or whatever. It's like whichever one is shorter. That's all they mean by term premium. Now, why does this matter? Why does this matter? Well, a steep yield curve is like rocket fuel for the economy. That's showing you that, hey, this world of capital markets, so you can come in here and raise money or borrow money. It's going to be an easy to navigate world for you because it makes perfect sense. It follows predictable logic. Of course, you should pay a higher rate on money that you borrow for a long-term loan, and you should pay a lower rate for money that you borrow on a very short-term loan. It's because it all makes sense. Now, the fact that it doesn't make much sense right now, that there's only a spread of 0.17 between the long end and the short end, that's out of whack. If you try to fix it, if the Fed were to try to fix it, that's called yield curve control, or YCC. If you ever see YCC, that's what all they mean is yield curve control. And the Fed has the tools to do it. He's like, if you want to pin the short-term yields so that they don't move, so they stay right where they are, or you want to bring them down, what you can do as the Fed is you can tweak what's called interest on reserve balance, or IORB. And you can also tweak the interest rates on what's called the discount window rate, where banks borrow from you. The discount window, that's when banks go to the Federal Reserve to borrow money overnight. You got a discount window rate. And that controls the short end when you control those two rates. Now, for the long end, you need to use what's called the System Open Market Account, or the SOMA. And that actually has another name. And Mr. Max, you actually called it out as far as what the name of it is, the SOMA. It's also called quantitative easing. It's also called money printing. If you want to control the long end of the yield curve, then what you can do is you can do money printing, or you can use the SOMA is the other official name for it. And that's the System Open Market Account. That prints money, it creates reserves, and it buys up these treasury bonds from the banks. They put those bonds on the Federal Reserve's balance sheet. That's QE. And what it does is it will expand the Fed's balance sheet. It will grow it, but it keeps the yields on these treasury bonds from going up too high. And the federal government wants this done. They want them to buy bonds to push the yields down so that the interest on the national debt is kept to a manageable level. Right now, we pay $1 trillion, or almost $2 trillion. Well, $2 trillion is the deficit, but we're going to pay $1 trillion a year in interest on the national debt with the way things are going now. The current Fed toolkit that we got right here, it could nail and clone the 1951 yield curve that we had back then. But here's the problem, is that politically, we don't have the people and the votes to do that at the Fed. Because currently, like, The majority of the people in charge at the Federal Reserve don't want to do this. They don't want interest rates to come down anywhere. They don't want to do yield curve control. Jerome Powell was asked about it in the last press conference that he had after the rate cut, and he basically came out and said, "Yeah, I don't want to do no yield curve. I don't want to do no yield curve control." But they've got to get back to this 1951 shaped yield curve that was more steep for the real economy, because at its core, Bessent's plan is going to be about shifting credit creation from the Fed and Wall Street and getting away from private equity firms and the rich to small and medium-sized banks that lend to everyday businesses. Scott Bessent had recently written a WSJ op-ed on this. The way that he framed it is he frames it as elevating Main Street over Wall Street, which is the most overused populist cliche that just about every politician says. But the idea there is, well, we want to do QE for poor people more so than for rich people, because we want the smaller banks to be lending out to small businesses. They want the banks to be taking on more risky bets, and the more risky bets for them would be small business. Now, they're going to be using the most undemocratic process to do it, and that is the Fed and the money printing at the Fed to get there. All right, and that's just the nature of all politicians. I mean, when you look at Scott Bessent himself, like, he really criticized Janet Yellen's policies, because what Janet Yellen did when she was Treasury Secretary is she issued lots and lots of short-term T-bills, and Scott, he criticized her for doing it at the time. But then when he got into office, when he became Treasury Secretary, he ended up doing the exact same thing. Now, what that tells me is not so much like hypocrisy that's common in every politician. What it tells me is that the situation is so dire that they must do the money printer when you have Bessent changing his tune to be exactly what Yellen's was. And I think, well, wait a minute, Cairo, does that make any sense? Like, explain that to me. Like, how do I know it's not just politicians being hypocritical? Yellen was issuing short-term Treasury bills because they're short-term, so they have a lower rate. That way, the federal government could borrow more money and do a lot more wasteful spending that the Democrats love to do without increasing the interest expense on the national debt. Bessent was criticizing that. Now that Bessent is in the Treasury Secretary seat, he's doing the exact same thing, because he sees, oh yeah, the long-term debt over here in this in the Treasuries is too great. If I issue a lot more long-term debt, the yields are going to go up. The interest expense on the national debt's going to go up, and we're going to bankrupt the country fast, a lot faster than we already are. So I'm going to do the same thing Yellen did. I'm going to issue short-term T-bills because the interest expense on those is going to be lower. All right. So because he's doing exactly what Yellen is doing, that tells me that the situation is really that dire, and they're going to have to do money printing at some point. They're going to have to. We don't know exactly how long it's going to take. I think the earliest it can happen is 2026 in June. I'll get to why that is here. Now, regional banks, for them to profitably lend, they need a steep yield curve. They need this thing that we had back in 1942 to 1951, which is a yield curve steepness of 1.83%. That's got to happen. They got to have that, because if they don't have that, then it's just not easy for the small and medium-sized enterprises to navigate. And that's who they're trying to sell to. That's who they want to loan to. Because they want to loan to the small and medium-sized enterprises, but they will only do it when that's more profitable for them, when it has more profit potential for them. Those small businesses, like, say, laundromats, that was a business I took part in, or storage facilities, or gyms, Those are the types of businesses that we're talking about. When you have those small businesses, and really they are the backbone. Like they're when you look at firms with 500 employees or less, they handle about 46% of all the job creation in the United States. When I ran my laundromat, I created 10 jobs in doing that because the majority of our business at the laundromat wasn't from self-service laundry. It was from people using our drop-off service where we did the wash, dry, and fold for you. But right now, with the Fed dominating credit, and when you have a flat or sometimes inverted yield curve, the money that is being borrowed in the capital markets, the debt markets, is flowing just to those big fat corporations because the banks view the small and medium-sized enterprises as just too risky. So how do we fix that? And how do we fix it is we're going to make the yield curve make sense, but then how does that fix the industry, the industrialization of America, and get the economy fixed like the way that Trump and Bessent want it to be? Well, for one thing, what happens is banks will lend to real manufacturers, the ones that build weapons. That's probably what they really want, is ones that build weapons because they want to do more war with they want to do more war probably with the whole Ukraine-Russia thing, the whole Gaza Strip thing. I mean, they're not going to call it war, though. They're going to call it democracy exports. So they're going to do democracy exports to places like Baghdad and Tehran and Gaza and even Caracas. Yeah, I think that you probably will see a regime change in Venezuela before 2028. But you pick your global hotspot. America's military is going to make an appearance there to stay on top, all right? As long as people are still around to vote. But to keep the average American happy while we're pissing away all this money on militarizing the world, and also keep the average American voting, well, they do that by expanding the welfare state. But the government still needs cheap financing to do that. Yeah, they'll expand the welfare state. They'll print money to do a lot of goodies and giveaways to buy votes for the most part. But they can't do it with the financing rates that they have now on treasuries. So you got to fix those long-term bond yields so you can issue more treasuries. And that's where you have the Fed step in and buy them up with printed dollar bills or newly created dollar bills. They don't really print them. And then the interest costs go down and the deficit goes down and everybody wins until inflation comes around. Because what happens next is the dollar tanks against other currencies and against gold. The exports boom. American goods get cheap for Europe and then the global south. And we're now more competitive with China and Japan and Germany. It's conceptually simple, but you see, the Fed's not on board with doing this because that is going to lead to a lot of inflation later on. And in fact, most of them are against doing all of this, especially QE, because it's like a nuclear bomb and it will ruin people's lives. So what are Trump and Bessent going to do about that? Well, do you wonder why? Have you wondered why it is that Trump is so gung-ho on making sure Lisa Cook leaves the Federal Reserve? Because it's very rare, very abnormal for the president of the United States to be as outspoken about this as he's been. Very rarely would he step in and say, hey, I think Lisa should go. It's not something that I don't think Biden would have done it. I don't think Obama would have done it. I don't think Bush would have done it. I don't even think Clinton would have done it. But Trump is. And it's because the situation that he's facing is very specific here. It's very different. You see, the reason he stepped in is because of this chart right here. Now, I hope that you can see. I hope that you can see the names. I hope that's big enough. Maybe kind of zoom in a little bit more. So these Over here on this column, these are the 7 governors of the Federal Reserve. These are the people that kind of make the decisions for the economy. We all know Jerome Powell, he's the chairman, but then there's also Philip Jefferson and Michael Barr. Both of those guys were appointed by Joe Biden, so we can kind of assume that they are not in, they don't see eye to eye with Trump and Bessent. Lisa Cook was another one that was appointed by Biden. We'll come back to her later. But Michelle Bowman, Christopher Waller, and Stephen Mirren recently, they were all appointed by Trump. And what you can kind of concur from all of that here, when you're appointed by Trump, he only puts you in there if you're going to do his bidding. And then over here on this side, it shows you when their terms expire and when they will be, when they'll be out, when they're done. All right. So you got 3 that will be yes men for Trump. But then you got these 3 over here up top, Powell, Jefferson, and Barr, who will be no. We'll be doing no votes against Trump. Lisa Cook's right here. She's the tiebreaker. And she is a Biden appointee, so it's likely she would vote along with these 3 up here, Powell, Jefferson, and Barr. This is why Trump really wants to get her out. This is why he had Pulte investigate her and uncover the mortgage fraud. That's all it is. They got to get her out of here because of that. All right. And that way, he has a majority of the governors on the Federal Reserve Board. All right. Now, the Fed's got 2 tools that they can use here, or two boards that make all the decisions. So first is the Board of Governors, which you're looking at right here. They control the interest on reserve balances, and they control the discount window rate. Now, the one that you probably heard of before that you're probably more familiar with is the other committee of the Federal Reserve, and that's the Open Market Committee, or the FOMC. So what we're looking at right here is the FBOG, but then there's also the FOMC. That's the one that decides what the interest rates are going to be, and that's the board that decides when they do QE or SOMA. The FOMC controls the money printer. How do they interact, though? And who picks the voters on these committees? And how can Trump legally speed run control before the 2026 midterms? You see, he's got to get this fixed here before the midterms, because if he loses the Senate, the Democrats are going to block every appointee he tries to put on the Fed. You can guarantee it. They would block everything that he does because they got a huge hate boner for him. And they don't want him to succeed. But when you understand, like, the Fed's decision making, I mean, that's really what informs my investment planning. That's what informs my investment decisions. So if you wanted to, like, mimic me or do exactly like how I do, or you just want to understand, like, why I say I think this is going to take until June of 2026, I mean, this is why. Because you want to predict how Trump and Bessent are going to twist their monetary policy. Well, one, you got to know who votes on what, how many votes are necessary to win, who picks the voters, and when do they swap out. What you can see here is that Trump needs 4 seats for a majority on the Federal Reserve Board of Governors. Then he can leverage that to snag 7 seats on the FOMC for full control. As a FOMC committee, that's 12 people that make the votes. If you have 7 of them in your pocket, you got full control. You got a voting majority. So let's talk about, like, what each one does and how the members get chosen, and what's going to be Trump's path to domination before the midterms of 2026. I mean, first, with the the Board of Governors, there are 7 members. All of them are appointed by the president, and the Senate has to confirm them. He gets to pick. Trump will get to pick. They got to run it through the Senate for a confirmation. This is why you got to get it done before the midterms, because if the Democrats take the Senate, they won't let him appoint anybody. The Board of Governors control 2 big levers. They control the interest on reserves, and they also control, besides like the discount window, what else they do is they approve the Federal Reserve district bank presidents who get to vote on the Open Markets Committee. Now, you want to get the short-term rates the way that you want them. Well, the Fed will set the interest rate on reserve balances, as that's part of like the federal funds rate that the FOMC sets. But if the Board of Governors were to set that interest rate inside the rate range for the federal funds rate, because it's the federal funds rate, it's always a range. It says 4.0 to 4.25. If they were to set the interest on reserve balances to, say, 4.05, it's within the range, then that is going to help them play nice. That's going to help them set the short-term rates. And normally, like, the Board of Governors plays nice with the FOMC, but if the Board of Governors were all on Team Trump and they think that the FOMC is being too tight-fisted, that's where we can have chaos, and I mean good chaos, because the Board of Governors could slash the interest on reserve balances to something way below the Fed funds rate. Fed funds rate right now is 4% to 4.25. If, say, the interest on reserve balances was set all the way down to like 1% or lower, then that's going to basically create an arbitrage opportunity for all the banks in this country. The banks will get to borrow at the cheap discount rate, which follows the interest rate on reserve balances, and then they get to lend at what's called the SOFR. You might have heard of it before. The SOFR, SOFR, just stands for Secured Overnight Financing Rate. So basically, it's an arbitrage opportunity. It's like the carry trade. If you heard about the carry trade in Japan, you get to borrow at a low rate and then lend the money out at a high rate and collect immediate profit. Free money, basically, a trade you can't lose. That's what the banks will get to do if the Board of Governors sets their rate lower than the federal funds rate set by the FOMC. And what happens there is the Fed gets played. They're going to be printing money on to benefit people like Jamie Dimon, the CEO of JP Morgan Chase, and all the other bank CEOs. And it's going to bleed out the Fed. So in order for the Fed to stop the bleeding, the FOMC has to drop the federal funds rate. They have to push it down, even if they don't want to, even if they're salty about it, even if they're all sick with Trump derangement syndrome and they want to keep the rate high just to stick it to them. They still have to do his bidding in that scenario, because otherwise they're going to be printing money just to enrich the bankers. And you know what happens when we do that. So if you've got a 4-seat majority on the Board of Governors, Trump can actually force them to cut rates fast. He can force them to do a full 1% cut in one of the Fed meetings coming up. He can force them to do a 2% cut if he really wanted to. Now, what do we know about this here? We know that Jerome Powell's term ends on May 15th, 2026. That's his term ends as a chairperson. And they can give the chairmanship to either be Waller or Mirren or Bowman. They can give it to either one of those. But still, Jerome is still on the board because his term as governor doesn't expire till 2028. We don't know if he'll stay or if he'll go after he gives up being the chairman. We don't know. I mean, hopefully he goes. Because if he goes, well, then it doesn't matter what happens with Lisa Cook, because the president, President Trump, will get to appoint his replacement. So they're really trying to put the pressure on getting Lisa Cook out here. They want Cook to be cooked so they can replace her and have the 4-vote majority at the Federal Reserve, and then we can do what we want. Trump can do what he wants with the interest rates. He wants the interest rates low. All right. We got a lot of board members already that are jockeying to replace Jerome Powell. And what they're doing right now to show that they're kind of campaigning for it is they're dissenting or they're talking policy. I mean, at the July meeting, both Michelle Bowman and Waller dissented. So Trump's got 2 already. Now, there was also a plot twist. You might remember Adriana Kugler when she abruptly left the Fed completely out of the blue. So that's how Stephen Moran got here. Stephen got here because Adriana Kugler disappeared. She left her post. Why did she disappear? No one really knows for sure, but the rumor is that her and her husband are up to some insider trading. Not to like having inside information, but there's blackouts where the Federal Reserve is not allowed to trade, or the people that work for the Federal Reserve are not allowed to do any sort of investing or trades during these blackout periods. Because like when they're about to make an interest rate decision, that's a blackout period because you know what decision you're going to make. So if you trade on that information when the public doesn't know, that's inside information, and that gets you straight up jail time if the Department of Justice were pursuing, if they decided to pursue it. So she dipped out before the DOJ could start breathing down her neck. If the rumor is true, it's just a rumor. But it doesn't matter because like she's gone, and that's all that we really wanted was for her to be gone so we could put Moran in there. Now, we got some more drama though, because I'm pretty sure that like Trump is having his people at the DOJ, at the IRS, go through all of these people with a fine-tooth comb looking for any reason they can to kick these people out. And that's what happened with Lisa Cook. She's been accused of mortgage fraud by the FHFA, by Bill Pulte, the head of the FHFA, and he's calling for her resignation. He might take it further. He might refer her to the Department of Justice and have Pam Bondi go after her. And grand juries, they indict most of the time. It's pretty quick, too, when they indict. And the DOJ is definitely being used as leverage, or it's being dangled as like a threat. Now, you heard probably Lisa Cook, she's holding out. She's refusing to leave and everything. It's not so much that like she's going to try to fight this all the way to the bitter end. I mean, it is possible she could fight this to the bitter end, but that's not what I think is going on. That's not what most people think is likely is going on. Like what she's trying to do is negotiate for a more golden parachute. She's probably negotiating to the point where she could have like a special agreement made where they agree not to ever prosecute her if she leaves, and she can get like a really sweet heart, fine paid academic gig where she teaches for the rest of her life. All right, so guilty or not, I mean, the DOJ's conviction rate is almost 100%. So Cook is cooked if she doesn't quit. And by early 2026 is when they got to get her out. And when they get her out, now we got 4 votes in Team Trump, and he can cap the T-bill, the T-bill yields by dropping the IORB, or the interest on reserve balances. And then when you've got the Federal Board of Governors deregulating regional banks and unleashing loans to Main Street and unleashing loans to small business, to medium-sized enterprise like Bessent wants, and they oversee all of the bank regs and everything, then we got the world that Trump wants, where there's more easy money. Still, we don't have the money printer on yet. We don't have the money printer on yet. All right, now I'll talk about like what causes the money printer to get turned on in a moment. We're going to get right into that here, but first, let me play you a really quick public service announcement. Why does crypto suddenly explode into unbelievable bull runs, only to crash just as fast? It's not luck. It's not random. It's macroeconomics. In decrypting crypto, you'll uncover the hidden forces driving every major crypto rally, forces tied to the global debt machine, central bank liquidity, and repeating market cycles. This isn't another blockchain basics book. This is the blueprint Wall Street doesn't want you to read. The playbook that shows you why crypto moves when it does, and how to spot the next bull run before it starts. Don't miss the next cycle. Read Decrypting Crypto. Arm yourself with the knowledge to ride the wave before it leaves you behind. Decrypting Crypto by Cairo. Available now on Amazon and Audible. I was hoping I'd be back before that clip ended there, but not quite. Sorry for the moment of silence there for a bit. Anyway, yes, that book kind of explains a little bit of a thing I'm going to explain a little bit about today here, which I call Cairo's Law. It basically explains why it is that crypto goes up. That's what that book does, and that is to help you explain to your friends when they ask you, hey, this crypto thing you're investing in, I see it's going up a whole lot. I want to get into it, but I don't understand why it goes up. Can you explain it to me? And when you can explain it to them and have it make perfect sense, they will invest. They'll be a very reliable onboard for you, I think. All right. So where we left off at here is Trump gets his 4-vote majority on the Board of Governors. The next puzzle piece is going to be controlling the money supply to pin long-term yields down lower, and that's going to be through using SOMA, or quantitative easing, or the money printer. What that means is that first you got to own the Board of Governors, then you can own the FOMC, the Federal Open Market Committee. Now, the Federal Open Market Committee, they're the ones that set the interest rates, they're the ones that turn on the money printer. There are 12 people on that committee that vote in the meetings that the Fed has. The next one is October 29th, I think. And when you have the majority on the Board of Governors, when you have the edge on the Board of Governors, you can use that to stack the Federal Open Markets Committee. All right? So how do you use the majority on the Board of Governors? I mean, those 4 votes that get locked in, how do you use those to flip the FOMC and get a 7-vote majority on the FOMC? See, that's the key to controlling the money printer. Here's how it's done. The Federal Reserve has 12 district banks, and each district bank has a president. The reason for that is like way back in the olden days when America had a very farm-heavy economy, when it was a very agricultural economy that we were running, they needed different rates for different regions because, some places did better with crops, some districts did better with cattle. That's all it was. So you had 12 districts. Each bank gets to nominate a president, but here's the catch. They're going to need at least 4 Board of Governors votes to be allowed to join the Open Market Committee. And only 5 of the 12 presidents vote on the FOMC at a time. And New York's president, they get a permanent VIP pass to vote. They get a permanent VIP pass to be voting each time. The other 4, they rotate annually. So I do have a chart that shows that one here. Let me pull that up for you. There we go. All right. So here's how it looks so far right now. I bring this up. This is going to be the votes coming up at the next OMC meeting. For every year that ends in, for every year, the district presidents are going to face a re-election. I don't think it's every year, but the ones that you see on this chart here, they're the ones that are going to face a re-election by the district board. So you get a simple majority, 4 out of 6, and that gets you voted in. Now, next February, it's going to be go time. It's going to be election time for the presidents of the board in Cleveland, Minneapolis, Dallas, and Philadelphia. And they also get to come up and vote in the FOMC. Then you also have New York's permanent seat. Now, who are these district board members? What makes them so important? Why do we care about any of this? More importantly, how does it affect crypto and get the bull run going? Most of these people that you see here, they're all TradFi people. They're all financiers. They're industrialists. But the big thing here is that their net worth is going to get a lot higher if we have cheaper monetary policy. If we got easy money, got plentiful money, we expand the money supply, their net worth will get a lot higher. So Human Nature 101 states that people chase their own self-interest. Even if some of these people that you're looking at on the screen right now have Trump derangement syndrome, once they get a whiff of higher asset prices, they're going to put on a MAGA hat, basically. So it doesn't matter if they're team blue or team red, they want those gains. So here's the play. Trump stacks the board of governors, gets a 4-vote majority. They only greenlight presidents who will vote for loose monetary policy on the FOMC. And the district boards know this. If they want to nominate some hawk who loves tight money policy, the board of governors are going to say, no, we don't want that guy, try again. So the boards will play ball. The district boards, they'll play ball. They'll pick dovish policy presidents who align with Trump and Bessent and are willing to pad their own wallets. So Trump only needs 3 of the 4 rotating presidents to be loyalists, and that plus his board of governors, that gives him his board of governors majority, that gives him 7 votes on the FOMC, and that gives him control over the money printer. And that is going to be ready to buy up. That money printer is going to be used to buy up Bessent's garbage debt that no one else wants. So that's how it is. That's how it works. This can take a long time. This can take a long time here. And it's basically, you can call it like the Treasury Fed mission or business plan of 2026. You know, they dart with the money printing, the yield curve control. It's basically Bessent's plan coming to life here, where you have cheap T-bills, deregulated banks leading to Main Street, long-term yields that are being pushed down by the money printer. You're probably wondering then, well, how does this affect crypto? I mean, let's start with, like, why do I think this takes a long time? Is just because, for one thing, the elections here for these presidents and the different district banks, that's not till February. Getting Lisa Cook out, that's going to take a long time if she wants to fight it all the way to the Supreme Court. I think the Supreme Court will side with Trump. Not so much of for the reasons that, not for like the reasons like that. Does Trump have the authority to do this? But they're going to say, well, the Federal Reserve doesn't even have the authority to exist or the authority to be independent. So the Supreme Court will definitely, I think, kick her out. But that could take a long time. And also the other thing here is that while Jerome Powell is chairman, he may try to obstruct the board of governors takeover for Trump. And not so much of you can't stop it or anything. You can't stop the process. You can't stop the plan. But what he may try to do here is he may try to screw with the voting in the sense of we were going to vote on the presidents of the district banks coming up here in February, but I think we should push it back. He could do that. I don't feel secure. I don't feel secure about the money printer getting turned back on until J-POW is out, which is not until May 15th, 2026. Then they're going to need 2 weeks to decide who the new chairman of the Board of Governors is going to be. And then once that decision is made and it goes through the Senate confirmation, which is going to take another 2 weeks, then it's June of 2026. That's why I think the bull market doesn't start until June of 2026. Got to get Lisa Cook out. You got to get Jerome Powell out. That fixes this. That fixes our majority that we want on the Board of Governors. And then they can fix the Board of Presidents, the district presidents, that can then stack the FOMC. Because you see, the way that it kind of works here in these FOMC meetings is each one of these 7 people, they get up and argue for like why they think interest rates should go up or why they think they should go down or why they should be held steady where they are. And then they vote. Now, everybody's kind of already made up their mind before the voting, so the arguing that they do in the 2 days that they meet doesn't really matter. It's all kind of ceremonial. So we got to get people in there that agree with doing things the way that we want to do it. That's how it works. All right. I see you guys are throwing some questions in the chat there. Go ahead and keep throwing them in. I will read them all before we end the program today. I probably wonder, okay, so this gets the money printer turned back on. How does all of that affect crypto? All right. Good question. And that leads me back to what I call Cairo's Law. All right. See, Trump and Bessent kind of see it as like their purpose to have the United States reclaim the global throne, to be like the king of the world for the most part, the best country among all the countries, like the superpower is what they want. They want America to be like the ultimate superpower that not only is the undisputed superpower, but nobody even comes close. And that means they want manufacturing done here for real goods, not just a bunch of bullcrap services. Because you see, Xi Jinping did this to China during 2018's trade war that Trump had back then. What President Xi did back then was he crushed Wall Street's animal spirits and big tech egos with a hard pivot that he took over in China. He got basically Alibaba to focus more so on production of real stuff and real important stuff that the world needs, not just the stuff you can order off of Shein and Temu. Because you see, much of China's economy back then was based on building ghost apartments and ghost cities, they call them, or these apps that let you get a bike off the street. Instead, he redirected all of their brains in China to green tech, to rare earths, to drones, to missiles, to AI. So a decade later, almost, China builds everything for the 21st century sovereignty. You don't need the United States anymore in the world if you're a third world country, or if you're not even a third world country, but if you're Russia or if you're Australia. You can get everything you need from China. You don't really need the United States. So Trump and Bessent want to fix that. So I wouldn't sleep on the idea of the Trump administration not pulling, I wouldn't sleep on the idea of them pulling every lever, whether it's printing to regulation or whatever, to transform this. So how does this affect crypto? It grows global M2. And Cairo's Law, what that says is that as global M2 grows, that pushes crypto up. That is what makes crypto go up. There is no bull run without an increase in global M2. And I'm going to show you a little bit of that here tonight. I wanted to have a lot more of this hashed out and like a lot more documentation of this before I went all the way into it. But I think I can show you a little bit of it here tonight. I'll definitely be doing a stream all about Cairo's law. Definitely be doing that. Probably do it Friday if I get everything ready for it here. Let's see. I want to show this and see where was the other. Okay, let's start with this one here. This is just the Bitcoin price versus the M2 money supply. When you take a look at this here, I mean, these things do seem to correlate pretty well. I mean, the trend on all of these, on the white and on the pink line, it's almost exactly the same. It's not quite, but it's almost there. And you take a look at the blue in the back, that's the year-over-year growth. I think that's what crypto really pays attention to, or what it follows, or what it front runs. Occasionally it front runs it. There is typically a lag, though, between the global M2 growth and then that showing up in Bitcoin. And it's a lag of about 6 to 10 weeks. Here's the interesting thing, though, that I discovered is that before the correlation picks up, before the lag ends, there is actually a divergence between the two. And typically how that divergence goes is Bitcoin's price will go down while M2 goes up. When that occurs, it's about 6 to 10 weeks of nothing but that. And that causes like a very nihilistic period like we're going through right now. Very nihilistic period like September typically is, where everybody's going, oh my God, it's all over. And they all panic sell and everything, because how they look at it is they look at the chart and see a divergence where global M2 goes up while the crypto is going down, and think, well, that's not supposed to happen. They're supposed to go up together, and because they're not, the bull run is over. That's what I think is happening with all. That's how I see it. That's how I see it with all these people, is they think that if they don't go up together, then they're decorrelated and the relationship is severed, which is wrong. Let's take a look here, though, at some previous bull runs. I mean, the first one that was documented was, 2013. That was where it ended. It was December 3rd, 2013. That was our first documented bull run. How did that look here in terms of global M2? Well, let's pull it up here. 2013, I see in these, what color is that? What is that? By the way, this is looking at just the four major central banks. It's looking at the ECB, the Federal Reserve, the People's Bank of China, and the BOJ, and looking at the supply that they had, the money supply they had there. So we see a pretty consistent uptick in this brownish, greenish graph, these graph lines here. Let me zoom in just a little bit closer. You can't see it too well here, but there is a slight uptick in those graph lines there. I'm going to try to get it a little bit better here for us. Okay. The main one I think to pay attention to, though, is this red line, because that's the year-over-year growth. When you have more money being printed this year than last year, that sends a signal to the investment markets that more money is entering the system. And you can already see from here, it was like way higher. Like here's the $45 trillion line. And then over here, it's by the time we got up to here in 2014, it was at 50 trillion. How did Bitcoin react? For the entire year of 2013, it went from like $10 all the way up to $1,000. That's a 100x. I mean, actually, it was more than that. It was a lot more because it went to 1,077. So 2013 was a great year for Bitcoin. The bear market, it wasn't quite 2014 because it did try to come back. It was going down, but it had a lot of comebacks all throughout 2014. I think the real bear market, like the real sucky year, was 2015 because it went down more and it stayed down longer. All throughout 2015, Bitcoin was sucking. Well, what happened to global M2 in 2015? Look here, it dipped. And it dipped pretty hard here. Because, like, first it was at 52,000. Then it came all the way down. Or not 52,000, sorry, 52 trillion. Then it came down to 50 trillion. And you might say, well, that doesn't sound like very much. The year-over-year growth was negative. Anytime the year-over-year growth in M2 is negative, that sends a very negative signal, a very discouraging and nihilistic, cynical signal to the investment markets. It really frightens them. All right. Now, let's look at our next bull run, which was the 2017 bull run. A lot of people try to give me jazz on this one. Say, oh, Cairo, you're wrong, because in 2017, we had quantitative tightening, which we didn't have. So that debunks your theory that quantitative easing is what causes the bull run. So we didn't actually have quantitative tightening in 2017. What we had is steady balance sheet maintenance, meaning it didn't go up, but it didn't go down. The Federal Reserve balance sheet was just straight across the board, which I can show you here. This flat line you see here, this was 2017. And a lot of people think, well, it stayed flat, so how come we went up the whole time in 2017 if the balance sheet stayed flat? Well, the reason why is that I discussed this a little bit on the stream, or not the stream, the spaces last night for Tam Tam, is that just keeping the balance sheet steady and keeping it consistent, not letting it tighten up, not letting it taper off, not going down, that is positive for the investment markets. It's not as positive as quantitative easing, but the investment markets respond to it very favorably. And we got a long history of investment markets that prove this, a very long history that proves the steady state market, steady state balance sheet maintenance is very good for the investment markets. I think I have some of that up here. Let me pull that up here just to kind of go through it with you here. Of like, does it? Yeah, I got a list of it right here. From those periods of time. 1982 to 1987, we didn't have crypto yet, but we did have the stock market. The balance sheet at the Federal Reserve was pretty stable compared to the economy. So from 82 to 87, the stock market went up 150% without them doing any quantitative easing. They just didn't do any tightening, and the markets did well. And 150% back then was a big deal. 1990 to 2000, that decade of the tech boom, we had a very steady balance sheet, no QE style jumps, and the investment markets went up 340%. 2003 to 2007, we had a very stable balance sheet at the Federal Reserve, and the markets went up 87%. The stock market. So just not decreasing the balance sheet is good enough to help the investment markets, especially crypto. Now we look at our next bull run here, the 2017 bull run. It went on throughout practically the entirety of the year, but it really got going from the summer and lasted all the way till the end of the year. How did that play out over here in? How did that play out in global M2? I'm gonna bring that up here because, like, the M2, it kind of dipped, then it kicked back up. So here's how it was going: is that it dipped right here. April 2017 is where, like, the year-over-year growth wasn't really looking all that great. The actual money supply had bottomed at $55 trillion in December of 2016, but the year-over-year growth was pretty small. Then it started going back up. It was small in April. It started going back up and kept going up all the way till January 2018. Let's look at the bull market chart. When did this bull market really start? Right here, April 2017. I want to hear every single one of you say, "Oh my God, Cairo, you are so right. I need to listen to just you. I need to not listen to any other streamer because none of them share this with me. I wish I had known this. I wish you'd shared it with me years ago. Cairo, your Cairo's Law is amazing. I'm going to stick to that from now on. I'm going to tell everybody, hey, you need to learn what Cairo's Law is. You need to buy his book." The bull run of 2017 starts in April of 2017. That is also when the global M2 for that year really kicked off with the year-over-year growth and continued all the way to January of 2018. When did the bull market end in 2017? In January, right after December. It was really January of 2018. That's when that bull run ended. You see why I'm pushing this so hard, you guys? The correlation is almost perfect. Almost perfect here. I mean, there's a lag, but this correlation is incredible. Let's look at the next bull run, the 2021 year. How did global M2 play during that? Hang on, I gotta fix the zooming here. Let's look at all this here. So the bottom, I guess you could say, was May 2019 at 64 trillion. That was as low as it ever got. And then what happened here was March 2020. That was when they really kicked it off with the growth of it. I mean, you could say, yeah, you'd have to say it was March. I mean, I guess you could say that it was February, but I'd say it was March because that was when the Fed had its emergency meeting. March 2020. Year-over-year growth went parabolic all the way up to February 2021. And we go from, how much here? From 69 trillion all the way to $81 trillion. And it kept going. It kept growing here. All the way to 87 trillion. Up to March 2022. I remember March 2022 very vividly because I was making money still in altcoins. It was still alt season. Up until March 2022, I was making money in the Phantom ecosystem. But then in March, I started losing money, and I'm like, whoa, what the heck is happening here? What is going on? That was the end of alt season. Everything started going down because global M2 started going down. It was at 87 trillion. It went all the way down to 80 trillion. And this is October 2022, which is very, very close to the Bitcoin bottom, November 2022. You see, guys, this is why the only person you need to listen to ever is me. I'm always right. No, I don't mean that. But you guys tell me in the chat, is there anybody who explains it to you better than I do? Or has anybody shown you anything that is better than this for an explanation as to why crypto goes up? Has anybody ever given you an explanation like this? I mean, I can't wait to have this discussion with T-Bird here because he's got to tell me like why I'm wrong here, and time is what's telling crypto what to do. When I can point to all this, be like, hey, the money printer went up here, crypto went up here. Money supply went down here, crypto went down here. Why is that not the catalyst? Why is that not the thing that governs it? Now, I want to look at something else very specifically that we all care about a lot, and that is going to be, how does it affect Hex specifically? How does it affect Hex? Because I noticed something March of last year. When we take a look over here, the year-over-year growth in M2 money supply, it was negative. It was negative in February, negative 1.4. Time kind of sucked back then. But then in March, this is 2023, sorry, I was looking for 2024. Sorry about that. So, in January 2024, it was negative. And it's really sucked in 2024 when it was negative in January. But then February, it went positive again, and it stayed positive in March. You have a 6 to 10 week lag between M2 growth and crypto. What happened with Hex in January, or not January? What happened with Hex? We could look at eHex. We could look at both eHex and pHex at the time. What happened in March 2024? Anybody remember? Or February even? Well, look at this here. This was the month that it went from negative year-over-year growth to positive, and it really kicked off. So this was Ethereum Hex. Here is Pulse Chain Hex. We look at Pulse Chain Hex for the same time period. It practically did the exact same thing. Yes, look at this. It really spiked up here and hit a pretty high top right there. Pretty high top for that period. On March the 10th, 2024, when global M2 growth went positive from being negative. Something else I want to show you here about eHex. I'm going to flip it a year back. Let's go back to the M2 chart. Remember right here I said, well, it was negative in February of 2023. Then in March, it was still negative, but it was going up and became positive by the time. I mean, it had to have been positive in March because you can't go from negative 0.43 to positive 2.13 without some positivity in March. How did that play out? We didn't have Pulse Chain yet. We only had eHex. Look at this. March 22nd, 2023, Ethereum Hex spiked up to almost 12 cents. And that was 100% all because of M2 growth. And what else was going on at the time? That was the Silicon Valley Bank failure. And they had to print money and do quantitative easing to get that under control, because we look at the Fed's balance sheet. Where is that? It's over here. Yeah, here's the Fed's balance sheet. If I can fix this. There we go. March the 1st is when they first started doing that quantitative easing at the Fed's balance sheet to save and bail out Silicon Valley Bank. To me, this proves I'm right. This proves Cairo's law. If anybody thinks they can debunk this, if anybody thinks they can challenge this, message me on X and let's duke it out. Because I think this is pretty solid and it proves my point. What causes crypto to go up is the money printer. And I hope that what I showed you earlier today here is why I think the money printer is not going to get turned on until at the earliest June of next year. It could take longer. It could take longer. But this is the best case I can make. And this is why you need to just ignore all the bull crap out there, all the FUD with people saying, oh, it's all over. It's not over until they turn the money printer off. Right now, it's already off because they haven't turned it on. They haven't even turned the money printer on, so it hasn't even started. Somebody tried to change my mind. I'm happy to have this debate. Let's look at some of the questions here, and then we'll call it a night. What do we got here? Mr. Max says, is there a chance that Bitcoin will have a run up to about 140,000, ETH to 6,000, a sort of mini bull run over the next 3 months? Everyone will say it's over. Never say never. That's one thing for sure. Never say never. I think that we'll get some bullish action. Say we have a difficult time throughout the Q4, but I think that we will get some bullish action because a lot of ETFs will be coming online during Q4. I don't think that ETFs by themselves are enough to propel a bull market though, because all that is that's just going to be more institutional money coming in for the most part, because the institutions are the only ones that push Bitcoin up. There is very little retail activity in Bitcoin. In fact, retail in Bitcoin right now are net sellers. Let's see. We had some more questions in here I didn't get to see. All right. There's one from Joe. He says, why do you celebrate when large holders keep leaving? Down only. No one is going to join anymore. Well, I don't celebrate that. I don't celebrate when people leave our ecosystem. Let's have a look here at it. Ooh. Looks like we just had a whale dump out right here. Yeah, I don't celebrate this. It doesn't look good. How's EHEX holding up? Holding up pretty well here, actually. Yeah, EHEX is holding up pretty well, which is incredible. But here's the deal, is would you rather this guy sell out now while there's very few people here in the ecosystem to get hurt? Or would you rather he sells out when there are a lot more people investing in these assets and there's a lot more people to get hurt? If this guy is fine with ditching these coins at the low prices they're at now, well, what that means is the people that just bought it from him are happy to hold these coins at these low prices that they're at right now. That means the people that are holding it right now have stronger hands. Those are the people I want holding these assets, the stronger hands. All right. Yeah, we had a lot of sales come through here recently. It's nasty. NJ Dub says he's challenging me on my position here. Let's put this on the screen. Sorry, bro, that's not correct. Hex pumped to 12 cents on the back of Pulse Chain Testnet V3 being released and RH confirming Pulse Chain was actually coming out soon. No, that's not correct. I mean, yeah, that's true that V3 came out. But why would Testnet V3 make it pump? Why would that? You can't do anything on Testnet V3 that is of any consequence. And I think that there was still another testnet beyond that, wasn't there? Wasn't there a testnet V4? And also, you know what? Okay, you know what, NJ? Let me challenge you on that, because let's take a look at the rest of the crypto market. What did the rest of the crypto market do around then? Because, yeah, if it was just Hex by itself, well, then I'll concede the point. But what did everything else do in March of 2023? Well, looky here. We got a run up in Bitcoin, going from 21,000 up to 24,000. And that doesn't sound like a lot, But you know what that is? To go from that much, let's see, that's a 20% increase. That's a 20% increase just in Bitcoin. And it went up even higher after that. Let's see, how about Ethereum? Ethereum pretty much sucked the whole cycle, but how did it do during that time? Probably didn't do that great, but let's see. Well, it had come down in February, then it kicked up, and then it kind of came down. And then roughly around that time, look at this, March, it goes from 1,400 to 2,100. 1,400 to 2,100. So you see, if it was just Hex that went up in March, I would concede the point. Maybe you're right. But with the fact that all of crypto did it, that proves my point. All right. So, NJ, if you got more that you want to challenge me on, just send me a message on X, because I'm happy to hash this out here for you. Happy to hash it out with you. Oh, Tob the Roos got a good question. This will be our last question for tonight. What if there's another black swan in the economy before June? That accelerates the QE process, yeah? Yes, that is a possibility. And I'm going to try to talk to Melody Wright about this, because she thinks that foreclosures could tick up, and it could be another 2008 again with a housing crisis. She says that they may not, the foreclosures may not actually kick up, though, until Q2 of 2026. And that kind of falls in line with how I see the money printer getting turned on at the earliest. Because we got a bunch of foreclosures happening in the economy in Q2 of 2026, and then we got the board stacked and Jerome Powell is off the throne. Very likely they're going to turn on the money printer because now they got cover to do it. And they'll say, hey, we got to turn on this money printer because you got all these foreclosures going on. Now, if we get into foreclosures a lot sooner, if we get a bunch of these crises happening, like, say, in Q4 of this year, if it's bad enough, yeah, they could turn on the money printer right away. But you see, it needs to be so bad that it has Jerome Powell change his opinion on what he thinks is the right thing to do. It needs to be so bad that it has Lisa Cook change her opinion, or one of the other governors on Team Blue. It needs to be so bad that it has them change their opinion. It needs to be something that maybe he calls them into an emergency meeting. I don't see anything just yet that could do that. I mean, maybe something does happen, but I'm really hard pressed to think of what it would be. I mean, when we look at the job situation, yeah, the revisions are bad, but they've not gotten so bad yet to the point of they're going to do a panic meeting. You need to see unemployment go up to 5-6%, because you see, then they can't really lie effectively about the jobs numbers. So it could happen. I just don't know what could cause that yet. What could be the thing that gets these people to change their mind and say, yeah, we got to turn this money printer back on. If you got a theory on what could do it, go ahead and hit me with it on X there, because I'd like to be able to analyze that. But anyway, that's all I got for tonight here. So I'm going to try to get Melody right in a conversation so we can talk about that. And next Monday, I don't know if it'll be live or if it'll be recorded, but next Monday, I'm finally going to have the conversation with T-Bird, and we're going to really hash out and not so much go to debate, but we're going to really clash on the 4-year cycle, the 4-year part of it. We're going to clash on that to see, hey, are we really bound by a 4-year cycle where we have to have the bull run end this year? And if so, why? That's what we want to hash out coming up next Monday. So make sure you don't miss that. Also, tomorrow night, we got something really cool going on right here. If you haven't seen it, let me pull it up right here. Basically, Fast Abdul is, in charge of this, or he arranged for this. We've got a very special X spaces with a very special person that we haven't done anything with previously. On X, she goes by Crypto Empress. And let's pull it up here. Here it is. She goes by Crypto Empress. Make sure you get to this spaces right here. It's very important that we make this one a success. She's going to do a spaces on what is hex and pulse chain. Now here it says guests will include Richard Hart. I think that I don't know that that's true. What I do know is that Fast Abdul will be there. I will be there. I think I might be speaking. I might be. I might not be. It just all depends if they got enough spaces for it. But yeah, Crypto Empress, she's going to give us a fair shake here and hear us out on why people should invest in Hex, why people should invest in Pulse Chain, or why people should at least care about it. And this is very important for us, guys, because she has a very big following on X, and she's from outside our community. So it's crucial that we show up, we make it a success, we let her know, hey, when you cover Hex and Pulse Chain, you're going to get a wide audience, and it's got to be a very respectful audience. When you guys show up to this here, 3 p.m. tomorrow, be as respectful as you can. We don't want to leave a bad taste in this woman's mouth here about Hex and Pulse Chain, because God knows that we had a lot of women here in this community before, and they got driven away. I'm talking about like KDP. I'm kind of upset about that one still. There was another one, I believe her name was Raquel Fuentes. I wonder what happened to her, but she disappeared. KDP, though, she got driven away by the PDI people and the Tang gang and everything. We don't want that to happen again here when somebody from outside of our community is going to listen to us and give us a fair shake. So let's all show up, be on your best behavior, don't act like jerks, but spread this around here. It already has like 231 reshares. Spread this around so that she knows that when she covers Hex and Pulse Chain, she's going to get a wide audience, because that means she'll probably cover it a lot more, and that will tell all of her influencer friends or KOL friends, hey, you should cover Hex and Pulse Chain because it gets you a wide audience. All right? So that's all I got for today. And we'll see you next time. I think we'll also be streaming on Friday.
That is it for us today, you glorious degens. Smash that subscribe button to join the rebellion, and follow me on X at Reinvent Ideal for more unfiltered truth bombs between live streams. And if this was your first time listening, head over to reinventideal.substack.com, because I have a free gift waiting for you there. If you become a free subscriber, you'll get a free copy of my book, Your Parents Were Wrong, Debunking and Replacing Outdated Advice, packed with the wisdom to outsmart the system. It's absolutely free to join, so no excuses. Grab it before the suits catch on. And remember, the bears get blocked right here and told to shut